Hi guys, this is Rudy for BesterInvestor. I'm back here on Friday afternoon, August the 7th, with your favorite topic and mine, Occidental Petroleum. Oxy is reporting their second quarter earnings on Monday. That's going to be August the 10th. And we want to probably have a bit of a heads up and see what we're walking into on Monday in terms of the earnings call and see what Oxy is going to do for us from that point forward. So let's take a quick look and see what the analysts are saying. So the first thing I want to do is look at the analyst recommendations. So you can see by and large that the majority of the analysts are saying hold, 14 at hold, and a few are saying outperform or buy, and a few are saying underperform or sell. But by far the greater consensus is hold. We know from past experience with Oxy that they have approximately 3.8 billion barrels of oil or oil equivalent in reserve, and that they have been pumping approximately 1 million barrels per day. However, demand has also been declining or had declined because of the coronavirus. And of course, for this quarter that they are reporting on Monday, it includes the months of April, May, and June. And arguably, April and May would have been severely depressed from a demand point of view. So regardless of how many barrels of oil you're producing, you have to sell them. So we'll see with great interest what this has done to Oxy in terms of the last quarter. On the plus side, of course, we've had oil at about $40 plus per barrel, certainly over the last 6 weeks or so. So that's been pretty good. How about revisions? So earnings per share revisions last week. Got 7 analysts revising up, 12 revised down. I actually think Oxy is going to blow through its earnings per share on Monday. It might fall short on revenue, but I think it'll do pretty good on earnings. And then for the next quarter, it's interesting to note that if oil stays in the sort of $40 plus range or even goes beyond that, 14 analysts have already revised up for the next quarter and only 3 revised down, and you can see that carries forward as well for the rest of the year and into next year. So there is some positivity creeping in here amongst the analysts. I do not attach too great value to what the analysts say, but I still like to have a look and see what they're saying in terms of the long positions I hold. What about the quantitative scores? So on this one, I went into my Morningstar account and took a look at Occidental. Most of you would probably, if you're following Oxy, you'd be familiar with some of these. Quantitative moat, none. Usually, like Warren Buffett always says, you want to invest in companies with a wide moat. There's no question that Oxy is undervalued significantly in terms of its assets. Morningstar is telling us that the fair value for Occidental is approximately $25.25. That's as of July the 31st. And I think everybody agrees that Oxy is undervalued, perhaps significantly undervalued. So for me, this fits my general thesis for an undervalued equity that I might want to invest in. And of course, most of you by now know that I'm long Oxy. And so this thesis kind of fits with my narrative on Oxy, except for the fact that the financial health of the company is somewhat questionable as related to all the debt that they took on with the acquisition of Anadarko. Price versus quantitative fair value. So this is an interesting graph for me. I'm not really a graph follower. I find most graphs look backwards instead of forwards, and forwards is just a guess. But that's just my take on it. So at a glance, I don't mind looking at graphs, but I'm not going to spend too much time studying graphs. We can see on this yellow line that's following this trajectory here, the quantitative fair value estimate. What's interesting to me here, just in terms of picking up on the forward guidance, if I can call it that, is you'll see this dotted area here, and that's kind of where the analysts in general from Morningstar are anticipating Oxy's future trajectory will be in terms of its price. So it's kind of heading into the sort of mid to high 20s there if the analysts have it correct. Most people would be aware of the fact that Oxy is trading relatively low in terms of its 52-week high and low, and of course in terms of its 5-year peaks and valleys. So it's very inexpensive. Some may argue, obviously, it's inexpensive for the right reasons, and other people might say it's undervalued. I'm in the camp that says Occidental is undervalued. This is a quick look at the historical quarterly earnings analysis, just going back in history. I don't want to go too far back, but you can see that over this period, 2018, they had a nice upward trajectory in terms of the quarterly results, and then they reversed that in 2018-19. So for 2020, this is kind of where we are looking right now, because this is where we are at. But once again, it's interesting to see the sort of future anticipated earnings for Occidental going forward into the next year. Financial strength. So as I mentioned just a few minutes ago, many people have criticized. I'm also cautious in terms of Occidental's debt because it's higher than the industry average. So on this graph over here, Occidental is the little gray square and the small thin black line is the industry average. You can see Occidental, as of last quarter, held more debt than the industry average. That is or is not significant. It depends where you're at and how you view the potential efficiencies that can be gained by amalgamating or integrating the assets from the two different corporations, Occidental and Anadarko. We know that Occidental has had a change in debt which was higher than average. The quick ratio is incredibly important to me as an investor because it shows me that Occidental has enough money or cash equivalents on hand to settle their debts today if they had to do so, and the interest coverage the same. So MRQ, most recent quarter, the interest coverage for Occidental is better than the industry average. So for the people who really make the entire narrative surrounding Oxy's high debt, the quick ratio and interest coverage effectively counters that argument. So again, you can take this sort of with a pinch of salt if you want to trust the analyst consensus on that. Everybody agrees that Occidental has a lot of debt. What I'm showing you here is based on their fundamentals. They have the ability to settle their debt. Just this little summary right at the top here, it's in small print, so I'm just going to read it very quickly. Oxy's debt to total capital ratio at 55% is in line with the oil, gas, and consumable fuels industry norm, despite its increase over the last year. With an interest coverage ratio of 2.66 times and a quick ratio of 1.06 times, the company should be able to comfortably repay its debt. That's why I'm saying that if you're an analyst or if you're a follower of Occidental Petroleum and your entire narrative is based on Oxy's high debt, there are a few bullet holes in your narrative, so maybe you need to look at some of these fundamentals with a little bit more clarity and make sure that you understand exactly the situation that Occidental is in as of today. And to close this off, all right, so let's, to close this off, look at a major investor in Occidental, which is Carl Icahn. If there's one investor that I have enormous respect for, it is Carl Icahn. His performance on his fund is a fund that he has that you can invest in. It's a limited partnership. I think it's IEP is the ticker symbol for it. From memory, it's trading at about $50 off a high of about 70 something. And it pays a dividend of almost 15% or thereabouts. That's a great investment for someone who wants to buy into a basket of funds managed by Carl Icahn and his team. Anyway, so Carl is, he announced this week, August the 5th, that he reported that his stake, including shares of the underlying warrants of Occidental, amounts to 10.7% of Occidental Petroleum as of this week. Previously, he had reported a stake of 9.9% in Occidental Petroleum as of March the 10th. Now, I don't want to be too bold on this, but I do want to say that if it's good enough for Carl Icahn, it's probably good enough for me. That's not the basis for an investment thesis, but it certainly gives me a sense of comfort that Carl Icahn is comfortable increasing his position. In fact, the mere fact that Occidental distributed these warrants was as a result of Carl and his 3 board directors' input in terms of addressing the company's performance and its debt and related issues about Oxy. So let's see what Monday brings. Monday is August the 10th. We'll await Occidental's quarterly 2 this earnings report with great anticipation. My prediction, as I said earlier, is that they'll probably comfortably manage to exceed perhaps or get to match the earnings per share of the analysts' expectations. They might fall short on revenue. I'm not too sure. It's difficult to guess what the impact of the coronavirus and the declining demand was in that regard. But let's see what happens on Monday, and then we can follow up and get together again to discuss it some more. So for now, this is Rudy for BesterInvestor signing off. Stay safe. Thank you for watching, and I'll see you soon. Bye-bye.